What's up guys, took a trade this Sunday, I'm going over it, and as always I posted it before it happened. I was watching this range, low time frame range, supply above, we already mitigated demand, and we're leaving liquidity above. And I wanted to accumulate here to potentially go to that supply. Okay, that was the plan, and what happened? Like, we formed this beautiful range and we left a lot of liquidity behind. But let's delete this real quick and let's play it in real time, because this is not the most ideal trade. That's why I didn't take it with full 1%, but I'm gonna explain it later. Let's trade it in real time with our first deviation as always. So this is gonna be your tap 2. You draw your range, of course, from low to high, because you're in a downtrend right here. You make a lower high and you're leaving a lot of liquidity behind. So these are the taps. You have your tap 1, you have your tap 2. You're leaving liquidity behind, so you can see all those highs, this high, this high, this high, this high, all those highs stacking up on each other, there to grab for the market makers. That's amazing. We see some supply in the upper section of the range. Here's some supply that you can put it on your chart as well. When supply is in the upper section of the range, I don't really care, but because this is almost always gonna get taken out eventually, so I don't even draw it always. But yeah, let's just draw it for the culture. Where is your extreme liquidity right now? Your extreme liquidity is your first move up, go down, go up, and then your first point is gonna be your extreme liquidity, and is there extreme demand, preferably below the extreme liquidity level, of course. But context wise, I hope you understand this is a very nice base to bounce from, because you were in demand. You had an aggressive push up. Market makers are feeling this inefficiency and they're trying to accumulate right here to go to the supply and to maybe take out the weekly high, maybe go even higher, so they are following liquidity. And we have our second tap right now, and we are obviously looking for an accumulation. So where's our third tap POI gonna be? As I explained, first move up, go down, boom, this is gonna be your extreme liquidity point. All right, what is very nice as well is that it deviates to tap 1. So if we are gonna grab it, it deviates tap 1, which is very nice, which I always say. And let's just play it, because we grabbed it eventually, and there we grabbed it. The time displacement was ass. It was shit time displacement, so that's not the best. And you preferably want to spend some time in the range, leave more liquidity behind, go down and break structure. All right, because then the volume profile obviously moves more down as well, which was not the best right here, but it was fine. So what happened here, we went even lower, so we extend our range and we see we formed a model 1. So did we break structure after grabbing liquidity? Because then we would have to take an L for W. And right here you saw the candles moving up, but you didn't break structure here. You had one close, and you always watch the second candle, of course, and that went down immediately. And there was even some low time frame supply right there, so there was something you had to watch for, and it rejected of it and it went lower. This was not a convincing break at all, so we went lower and we have our tap 3. Did we break structure here? Let's watch if we are in the volume profile first. Boom, draw from the first point, and you see you're not in the volume profile. There's a lot of volume right there in the upper section. And let's see if we broke structure, because the time displacement matters a bit less when you have such a good return to zone. So I care a bit less about the time displacement, but I was already long if you watched a couple videos ago from this point. So I still have a pretty big long open from this point, which is fully de-risked. I obviously took a lot of profits from that, but I still have a long open, which is this long, and I took it on the second account. So this was a 0.5 risk trade, so not full risk. And did we break structure here? Yes, we did. We broke structure in the 1 minute. This was not really structure, but this was, you had 2 candles up before going down, so that was a structure break. And I took it literally on the close. I was watching the second candle, I took it on the close right there, and stop went below that low, and I was targeting, of course, the range high. And as I said, I don't really care about supply because it often just gets taken out, and I have a runner which runs all the way to that supply, and this is purely focused on that trade. So we went down here, and what happened, because we didn't take out that low, and we were fucking around right here a bit, and we were just taking our time before we going up. and then we went up, and let's see where we are now. Boom, right now we are rejecting. We are leaving all those highs above still, and we are going to this demand right there. Boom, this demand. Maybe we will get a retest, maybe the model will fail, I don't know. But the thing was, I was trailing my stop loss from this low to that low, and then from this low to that low. So I trailed my stop to here, which is why I now only risk like 0.3% on this trade, so that's almost nothing. And I'm still targeting the range high and have a runner to that supply, and not looking to add more. This is just a nice trade, but it was not the highest probability model. That's all. That's also the reason why I took it with 0.5% and just clear, just fell it. And I hope you understand it. I see you in the next video, guys. Ciao, ciao.